Silver has been one of the biggest market stories over this past year, surging more than 120 to 150% and hitting record highs above $75 per ounce. But why has silver exploded so much and what could it do next year, especially with growing demand from solar panels, electric vehicles, data centers, and batteries? Today we'll break it all down. 2025 was extraordinary for silver. Prices began the year much lower, near the $28 to $30 range, and by the year end climbed above $75, even briefly touching new records in multiple markets. In some future markets, silver soared over 130% year to date. That makes it one of the strongest commodity moves in decades. Why silver ran up so hard? Investment and safe haven demand, amid economic uncertainty, inflation fears, and talk of rate cuts. Many investors rotated into silver as a store of value. Precious metals broadly rallied, and silver often outpaces gold in percentage terms during these times. Silver also outperformed many equities and even gold ETFs at times, drawing strong inflows into silver ETFs. Structural industrial demand boom. But silver isn't just a precious metal. More than half of all silver demand now comes from industry. Here's where the story gets long term. Solar panels globally use silver in photovoltaic cells for conduction. Growth in solar installations has dramatically increased silver consumption. Electric vehicles and batteries need silver in sensors, wiring, and power electronics, and demand here for 2025 was up sharply. Data centers and AI infrastructure also drive industrial usage. Unlike some commodities, silver supply cannot easily expand because most silver is a byproduct of other metal mining, meaning supply often lags demand growth. What industrial uses mean for price? Silver's industrial role makes it different from gold. If demand for green technology, EVs, and solar keeps rising, that becomes a structural driver, not just speculative demand. For example, solar demand alone has grown many times over the past decade. Automotive demand is forecast to grow significantly as EV production expands. That means if EVs and renewables and tech keep scaling rapidly, silver consumption still outpaces new supply. That kind of imbalance historically supports higher prices. Where silver could go in 2026. Conservative estimates. Some major bank forecasts still see silver averaging around $56 to $65 per ounce next year, below where it ended this year. If industrial demand and investment calm down a bit, neutral technical estimates, analysts see silver breaking above $70 to $88 next year if demand remains strong and technical price trends continue. Bullish views. Seasoned precious metal investors are even forecasting $100+ in 2026 if structural demand and supply deficits persist. Why? Because a lower gold-silver ratio, continued use in renewable tech, and potential liquidity shifts could keep pushing silver prices higher, especially if the US dollar weakens or interest rates fall. Risks and volatility. But let's be real. Silver is one of the most volatile commodities. Short moves up and can reverse just as quickly, especially if investor sentiment changes or demand slows unexpectedly. For example, some industrial demand figures could moderate if certain markets slow or efficiency improvements cut silver usage per unit. Conclusion. What stackers should think about. So what does all this mean for you? Silver's price run in 2025 showed how powerful both investment and industrial demand can be. Industrial applications like solar, EV batteries, data centers, and tech will keep underpinning demand. Price targets for 2026 range from moderate levels, $56 to $65, to high targets of $70 to $100+, depending on demand strength, dollar trends, and supply constraints. Remember, no forecast is guaranteed, but the structural story for silver is changing faster than at any time in decades. Drop a comment with what price you think silver will hit in 2026. Hit like if you're stacking and subscribe for more silver market breakdowns.